It's time to break down some 2024 property predictions. We're going to be taking a look what property commentators, economists, and analysts are saying in the property market for 2024, and I'll be sharing with you some of my property predictions as well. Now, my name's Luke. I talk all things real estate, renovating, and financial freedom on the channel. Drop a like on this video. Head over to purposeproperty.com.au if you're looking for a Brisbane-based buyer's agent, and let's just break down some property predictions. Prediction number one is the property prices are going to continue to grow across the nation in 2024. What we're seeing from a lot of economists is a breakdown of property prices, somewhere between 2 to 7% nationally for the next year. There's an expectation that Brisbane, Perth, and Adelaide will be the front runners in 2024 when it comes to property prices, but Sydney and Melbourne may also have a resurgence given the overseas migration and most of these migrants moving into these major capital cities. The regional towns are expected to fall off a little bit, and also Northern Queensland and Darwin are expected to underperform, again as people move away from the regions back towards the national cities in 2024. The most important thing to understand here is that this is probably too macro to make a decision on. You need to dive more into the detail around the locations you're wanting to do your research on. You need to look at the suburb specific level rather than looking at a capital city or a region as a whole. And I know for the fact in Brisbane there's hundreds of suburbs that we analyse each month to make our investing decisions and to work with clients on making an educated and an informed decision. The way we do this is by building a weighted average funnel and analysing the suburbs looking at the data. We want to understand the median price trends over a 3 to 6 to 12 month period. We want to look at the incomes and the demographic data in these areas. We also want to mix that quantitative data with the qualitative data. So you want to understand the future infrastructure projects, the plans that council have in the future, where the jobs are going to be. Are they easy to walk around in, or are there some great school zones? So when it comes to Brisbane or Southeast Queensland, you can't just look at Brisbane's growth potential in 2024 and say, yep, we're going to have 5, 6, or 7% growth next year. You also need to dive into the detail, look at the suburbs, and analyze the areas that are at your price point and that meet your strategy. The next big prediction for 2024 is what is the RBA going to do? Now, most economists and analysts are predicting that rates will begin to be cut in late 2024. Now, in my opinion, that's probably sitting around August, September, assuming that inflation continues to come down. The data is going to be interesting over this Christmas period. We've just had some Black Friday sales. We're going into a big Christmas, and Boxing Day is the biggest selling period of the year. So if Australians are cashed up and also spending big, we may even need to see increases in the cash rate in early 2024 and then cuts in late 2024 from there. So it'll be really interesting to see what happens here. A lot of people are going to be holding on for dear life until 2025. I know a lot of homeowners who've overstretched, who bought too much home, who don't have the cash buffers in place, or maybe a little bit nervous about their job or their income, are going to be holding out for the next 12 months, as most investors and homeowners are paying around a 6 to 7% interest rate at this point in time. I know for myself, my loans are sitting around 6.4 to 6.6%, and our cheapest loans around that 6.1% at this point in time. So all of our loans personally are in the sixes. And if you're sitting on a 7% plus interest rate, make sure you call up your bank and ask for a discount, or reach out to a broker and have a chat. That's the biggest takeaway when it comes to this prediction in 2024. Focus on what you can do. Yes, the RBA is going to look at the economy and maybe change the cash rate up or down throughout the year, but look at your own situation, look at how you can use these predictions to your advantage. Make sure you call your bank, get yourself a discount, and make sure you're optimizing your property portfolio, whether it's just your own home or some investment properties, to give yourself the best deal and to make sure you're maximizing your cash flow. Now, one of the next really interesting predictions is that we're not going to meet the housing supply targets of 250,000 properties as a minimum in 2024. The expectation around the data and the numbers is that we're roughly going to build 180,000 homes in 2024, not the required 250,000 plus homes. What this means is we're going to continue to see an undersupply of property, especially in areas people want to live. I know there's been a lot of talk in Sydney on the northern beaches. There's been a lot of talk here, Brisbane, in the inner middle ring, where they're wanting to increase density. And these locations that are sought after, where we've got $1 million homes, adding density is not really an easy thing. Construction costs are high, labour costs are high, and actually getting a development application through council can take years, especially for these large-scale projects. So given the difficulty to actually get approvals, given the difficulty of costs and labour, I can't see the supply story changing anytime soon. So being around 70,000 plus homes short each year, especially next year, is only going to contribute to the pressure on property prices in 2024. Now, the next prediction we have for 2024 is there's going to be some more distressed sales in Australia's property market. For people who have been in these overstretched positions and are looking to sell up, I'm expecting some more deceased, distressed, divorced sales in this next window. So over the next 6 to 12 months, even though we're going to see property price growth, I think we're going to see more people sell out. Now there's data talking about reselling within a 2 to 3 year window. And we've seen an uptick in people selling homes that have bought them in the last 2 years, cashing out, taking a capital gain and moving on with their lives, whether they're buying their next home or an investment property. Now Emily and I are actually going to look to sell one of our investments in the next year. And the reason is we're wanting to use those funds or that cash for our major raise and build project, which is currently underway. We're actually about halfway through and we can't wait to share the series with you guys on the YouTube channel. So with our raise and build project, we're spending around $500,000 to $600,000. The initial budget was around $400,000 and we're probably going to end up being about 30% over in terms of our budget because as we spoke about before, material costs are up, labor costs are up, and that's why our budget's blown out by about 30% extra. Now what this means is if we have these distressed sales or people selling up who've owned properties in that 2 to 3 year window, there may be the opportunity for people to acquire their investment or their own home in this window and get a reasonable price. We've actually been able to buy a few distressed properties in the last 3 months, and it's about being able to move quickly, giving those vendors reasonable terms, strong deposits, and putting our best foot forward in the negotiations. This means you need to have your finances in order. So if you're looking to work with us at Purpose Property or any buyer's agent for that matter, or you're just looking to do the journey yourself, make sure you have your finances in place because you can't take up these opportunities unless you're able to move quickly. So that's going to be the case for a lot of our buyers in early 2024. I know I've got a lot of people interested in signing up in the new year. So as a buyer's agent, we make sure all of our clients have a pre-approval or at least an indicative approval from their broker or bank in writing. And this just gives us the confidence as a buyer's agent and the buyer as well, knowing how much their purchase price limit is. So go out there and do that yourself to be prepared to snap up some bargains or to snap up these opportunities when it makes sense. Now, the next big prediction for 2024 is what is going to happen in the rental market. Economists are saying that we could see another 10% increase in rental prices in the next 12 months. And so as a lot of the states are only allowing one increase every 12 months, we could see significant jumps for renters in this period of time. I know for a fact that a lot of properties are under rented compared to the market prices that we're seeing on the ground. So it's going to be very interesting. If people are paying $800 per week and that goes to $880, will they look to jump and try and find another rental property? Or given the lack of supply and lack of investors in the market at this point in time, and 90% of rental properties are provided by investors, by mum and dad and company investors, not the government, in this scenario, are we going to see more renters struggle in 2024? The biggest thing for me when it comes to renting is Emily and I were able to live below our means. And so this can be quite hard, but maybe you can look to move into a share house. Or if you're buying your own home, maybe rent out some of the bedrooms. Our very first home that Emily and I bought, we lived downstairs and rented out the rooms upstairs. So look at creative ways that you can ease the stress in your life by renting out rooms or coming up with creative solutions. And as I said earlier, you need to live below your means. The first 2 or 3 years that Emily and I were married, we paid somewhere between $320 to $400 a week for rent. Now we could have spent $500, $600, $700 a week on rent and lived in a lovely apartment on the water in Tenerife in Brisbane, but we chose to live in a pretty cruddy apartment to begin with on the south side of Brisbane in a suburb called Holland Park. And yes, it was a bit noisy. Yes, it wasn't very well presented, to be perfectly honest, but we were only paying $320 a week of rent. So if you're able to lower your stress levels, give yourself more opportunity to save and snowball your investing journey, that's how over time you can then start to have those luxuries down the track. It's about delaying gratification. A lot of renters are going to struggle in 2024 if we see these predicted 10% increases in rental prices. But look at your situation and come up with creative ways to reduce your rental costs, whether it's renting out rooms or whether it's trying to find a cheaper place that meets your current requirements. This leads me into my next prediction, is that I think some investors are going to leave the market in 2024. Given that, like I said, the property market or property investment market here in Australia is dominated by mum and dad investors, and most of the housing that renters use are from these mum and dad investors, not the government, I think we're going to see more investors sell up. Now, some people would say this is a great thing because it means there's owner-occupiers who can break into the market. But on the flip side, a lot of people just want the flexibility of renting. They want to find a place to stay, sign a 12 or 24-month lease, and secure their own home and accommodation for a period of time. With the higher interest rates and with the pressures and taxes that some of the states are putting on property investors, I'm looking at you, Victoria, in particular, then it's going to push some of these investors out of the market. So if the states continue to penalise property investors for putting their money to work and trying to create a better life for themselves and for others, then we're going to see more investors jump out of the market over time. In particular, I can think about Queensland's land tax that they tried to bring in. Some of the rental laws have become very stringent on property investors. And obviously the interest rates are impacting investors at this point in time. And we're not going to see a reprieve probably till late 2024 or early 2025. So it'll be really interesting to see the ratio of investment properties to owner-occupied residences over the next 12 months. Now, here's the biggest prediction of them all, and that is you need to take action in 2024. There you go. There's a property prediction for you that you didn't expect. So when you're looking at 2024, what can you do? Yes, all this macro information is great. It's good to be educated, but it doesn't make any sense unless you go out and do something. You don't want to be fearful of what's going in the market. You want to take an educated and an informed decision. But once you've got your finances in order, which is the first thing you need to go and do in 2024 to get ready to go and buy a property, then it's about understanding your strategy. And maybe you don't have a strategy. So if you want to have a chat with myself and you're looking to buy a property here in Brisbane or Greater Brisbane in the next 6 months, head over to purposeproperty.com.au to have a chat. We'll sit down in our buying brief session and go through 5 key areas: the price point, the strategy for that purchase, the suburbs, the property specifics, and the red flags. From there, we'll help you secure the right property for the right price in the right location. And we'll also discuss your macro strategy about how to build a property portfolio that suits you and your goals. So make sure you take a pragmatic approach to 2024. Don't just worry about these property predictions. Go out and do something in 2024. Whether that's fast tracking your savings journey or looking to restructure your property portfolio or to get your finances in order or go out and buy. Make sure you're taking the incremental steps to continue your journey on your path towards financial freedom and to creating more choices. That's exactly how Emily and I got here to where we are today, to running this business with our team. It was a matter of taking incremental steps. If you're interested in seeing our journey over the last 8 years, then make sure you click this video over here and I'll break it all down for you there. Thanks for sticking around. I'll see you in the next one. Peace.